doing? Anshul, hi, good morning. Great to have you on the show. Anshul, still not as much cheer. Not everyone's feeling happy because their portfolios haven't quite moved with the Nifty hitting an all-time high. What's the message to investors right now? How is it that they should be looking at the markets?
Morning, Aisha. Always a pleasure. Yes, there is very little Christmas cheer around. Christmas is approaching us, New Year's is approaching us, but there are sulking faces, as you rightly mentioned. But this is precisely what a value investor seeks, because it is when everybody is a little bearish, a little lost for hope. It is then that you find valuations which are attractive for purchases and for building portfolios. In our judgment, in the last, say, 12 to 14 months, there has been a tremendous correction of valuations, both on the absolute as also on a consolidation basis, that is a time basis. And as a result, value has emerged in certain pockets in the markets. And for an investor who's not worried about the next quarter or 2 quarters and is looking to invest for the next 3, 5, 10 years, say a generational investor, for him or her, this is an apt time to actually be building portfolios and to be adding quality names in portfolios. So in reality, this should be a time to cheer. But in practice, because portfolios are not really going up, a lot of investors they don't have so much hope for the future. I think that it is just the opposite at this time.
Anshu, you did say it's time to pick out some quality names. So clearly a stock picker's market right now, which are some themes or some sectors do you think will do the heavy lifting going ahead now that we've already peaked out at a fresh high?
Yes. Hi. If you look at sectors and how the Indian economy is progressing, there are multiple pockets where one can make a case for the industry itself to grow double digits. And if you speak with individual companies, you'll get a sense that those companies are building in quite robust growth on the top line. That is around 20% plus. Take renewable energy. Across that space, there are companies which are available now at reasonable prices as regards how they're going to grow in the next few years, and opportunity lies there. Capital goods. Everybody was running over one another to buy into capital goods some time back, say 12 months back. But now that there has been a time correction and in some cases significant price correction, there is circumspection around. That is a space which is attractive. Metals have done nothing for the last 3 to 4 years. And if there is anything that one can learn from what has happened in gold and silver, currency depreciation has led to gold and silver actually appreciating as they have. And we could well see a similar trend in metals across the board. That is a space which looks attractive on valuations. And then, of course, the regular names and sectors, the likes of banking and finance, etc., those also look quite attractive.
Interesting. Long list of interesting plays, but we'll discuss all of that.
Impact for the stock. There was a gap which was created for Bajaj Finance. That gap was around 1,050 to 1,070, 75. That gap has not been filled. Ideally, it takes at least a week or 10 days for the stock to settle into. But if in those 10 odd days, if the stock doesn't fill the gap, then it acts as more of a resistance zone. Right now, yesterday, the stock showed good performance, but it's still at 1,035. So it's still 4% lower than the first major resistance point. And I would sense that the stock has to do a lot more better to try and surpass this 1,075 mark. So price-wise, yes, the stock in the last year has done phenomenally well. But just based on the results impact in the last 2-3 weeks for Bajaj Finance, I think there could be some bit of a cap or a ceiling which could be there into the stock.
So are Shriram and Chola Finance looking stronger?
Yeah, they are far more better bet, more confident and more stronger bets, less volatile. Bajaj Finance has all of a sudden become very volatile.
Yeah.
You don't see the stock going to gap downs and gap ups and then 5%, 3% up move in a matter of couple of days. When that happens, it's a lot of fight and a tussle which happens between bulls and bears and supply and demand for the stock prices. That has to settle into for the stock to go into an uptrend. On the counterpart, you look at Chola Finance, you look at Shriram Finance, hardly any signs of
Steady.
volatility.
Yeah.
Absolutely steady for the stock in terms of price trends. I think that's where the trend would sustain.
And you see gold finances now in demand, right? Muthoot's and the Manappurams of the world. Means there is shift of buying happening towards some of the gold finances.
Yeah, I think they've been doing separately very well in their own part. You know, gold finance, I think Muthoot Finance has done phenomenally well. It's almost mimicked the gold prices in terms of in absolute returns. Manappuram has been an underperformer, but I sense that the stock is also showing signs of some support at this 275, 285 kind of a range. And I believe that this could be a very strong accumulative point for Manappuram Finance as well.
Anshul, what's your take on some of the gold finances and the fact that you have Bajaj Finance now becoming a little volatile in terms of the price movement?
Gold financiers are a great play on gold prices in general. And some of the gold price increase has, as Kunal mentioned, has been reflected in one of those large plays, not in the other one. And that's largely because, there are lending limits of individuals who are applying for loans to these companies. Those open up. And as a result, the growth potential for these companies actually goes up materially. In fact, much more than the jewelry companies, these gold finance companies are a proxy to gold prices. And in that context, it does look like there is attractive valuations combined with a growth potential in these names. And one of the large players has shown in price action that sort of move up, while the other has really not shown that much of a momentum, even though there is a new owner, or I shouldn't say an owner, but a large shareholder who's come into that company. And that should propel some interest because of corporate governance improvement. So, positive, but, there are nuances within the sector, which will mean that one will have to take bottom-up bets in the sector.
Anshul, what are you making of the entire cap growth / infra space? You have L&T that's at a fresh all-time high. But given that the focus is pivoting from capex to consumption, where do you think infra or cap goods as sectors are headed?
As regards cap goods, we'll have to look at that in perspective and how that sector is shaping up, not in the near term, but in the next 5, 7, 10 years. We saw that decade of 2012 to say 2021, 22, where really nothing happened in capital expenditure in this country. And it is that backlog which needs to be filled as we move ahead. Add to that the fact that India has really not been manufacturing much. We've been really left behind on manufacturing, and we need to do a catch-up even there. With the Make in India theme, the PLI scheme which has come into place, we see that there is tremendous room for cap goods to do well because capex in this country will pick up with quite a bit of gusto. And so leave alone a quarter here, quarter there. But if you look at the next 5, 10 years, capex and cap goods as a result are a great theme to play. In the near term, as you rightly mentioned, consumption is a theme which should really pick up. In our judgment, both the tax cuts on personal taxes as also on GST should be quite positive on consumption. And having spoken to some companies recently who have a play in this space, body language and their commentary both suggest that there is tailwinds that they are witnessing in this quarter. And then they are quite hopeful for the future. So consumption clearly is a big theme, but capital goods, that is a long-term theme and we shouldn't really ignore that.
Okay, interesting. Let's talk about another segment of the market, and that's plastic pipe industry. And that's been under sharp pressure as PVC prices have fallen, imports have surged, and demand continues to stay weak. The withdrawal of BIS certification and the expiry of anti-dumping duty has also opened floodgates to cheaper Chinese PVC, which is dragging prices down to now 6 rupees per kilo this quarter. Rabinder is here with the analysis.
Well, as the Indian plastic pipe industry is under pressure from the past few time on the back of the weaker demand, intense competition, and a sharp correction from the PVC prices, and the withdrawal of BIS certification and the expiry of anti-dumping duty on PVC resins has opened the domestic market to cheaper imports predominantly from China, leading to a pricing pressure on the Indian plastic pipe industry. And this development has already triggered an immediate of rupees 3 per kg price fall from the 15th of November 2025, taking the total decline of rupees 6 per kg since the beginning of the quarter. And according to Nuvama research, PVC prices remain under pressure as imports are being offered at 61 to 62 per kg versus Reliance prices of 66 to 67 per kg, indicating a likely further drop of 3 to 4 kg. But there are certain tailwinds for the industry, for the plastic pipe industry in India, where traditional PVC price segment is expected to grow at 6% CAGR over the year, with the future growth also hinging on new product categories such as PVC, and a demand recovery is expected in the second half of FY26. And Supreme Industry, Astral, and Finolex Industry Management is also confident for the recovery in the second half of FY26, where Supreme Industry expect a better margin in the second half of FY26, and Astral say that they are continue to gain market share, which is supported by the improving construction activity post monsoon, while Finolex Industry expect mid-single-digit volume growth in the FY26 and is evaluating new product target beyond agriculture application. And lastly, if we look about the stock tracker of the Indian plastic pipe industry stock, then in Supreme Industry down 1% in 1 month, Astral up 1% in 1 month, and Finolex Industry down 13% in last 3 months.
Okay, Ravinder, thanks for taking us through that. So yes, some of the listed pipe companies in India have seen a lot of pressure in the last 3 months to 6 months itself. Anshul, your view on sectors that are affected by raw material volatility, jewelry on the back of gold prices, and now pipes on the back of this PVC pricing. How do you view these sectors, and how does one play a sector like that?
Yes, temporary impact because of raw material, prices falling is generally an opportunity to buy, because if the market reacts to raw material declines, or in certain instances raw materials moving adversely, generally the companies take some time to adjust to this eventuality. If there is a decline, there is, of course, an inventory impact, but then companies adjust their prices accordingly, and then things smoothen out. Once that happens, that one-time impact goes away, and earnings reflect the true earning power of a company, which is what the markets are seeking to understand, and which is what the markets are reacting to. So short-term impacts because of raw material movements should be taken as a positive development as regards valuations, and a favorable sort of future move in stock prices could be built into calculations thereafter. But that will have to be on a case-to-case basis. There are certain cases where these movements in raw materials impact earning power permanently. In such instances, one should stay away. But by and large, this is it offers opportunity when this happens.
Actually, if you look at some of the FMCG companies, it was expected that after the GST cut, there may be a run up to some of the companies there. The Nifty FMCG index is up only a percent, means 1.4% in November. So it's grossly underperforming the other sectors, especially the financials.
Right. And the GST impact came towards the end of September. And in that period, from the time that the Prime Minister spoke about it, which was 15th August till end September, there was anticipation that a big change is going to happen. And so purchases stopped or at least sort of moderated at the end of the distributors and dealers. And so volume growth was quite tepid in this space in the previous quarter. But then what one should really go by is the commentary that many of these companies have given in their con calls. And that commentary has lifted hope. Their sort of guidance or directional indication in regards to the earnings growth of these companies has been quite strong. And going forward, if that was to play out, it will have an impact, a ripple impact on many other sectors. Of course, on this sector, it will be a positive, but then ad rates, ad volumes, those could pick up. And so it will have a ripple effect on sectors which depend on advertisements. And so I would be I would be cautiously optimistic on this space. And I think that from the commentary, it is quite evident that going forward, there is going to be tailwinds in the FMCG space in general.
Okay, so looking good for the FMCG space. But Anshul, while talking about FMCG, even when you talk about staples, there are different segments like personal care, home care, oral care. Which segment do you think could outperform? Because we've seen mixed moves even within FMCG staples in the last couple of quarters.
That's a very important question, actually. We are seeing these developments across sectors where within the sector, there are some segments which don't do well. In other segments, there is actually tailwinds. Of course, in this space, there will be certain segments which will do well. I've not really gone into so much depth because this is not a sector of interest to us. But if you look at, say, the auto space, in the two-wheeler space in the last first half of the financial year, we witnessed the 250cc and higher bikes doing very well, while under that, the bikes did not do well. Scooters did well for certain companies, they didn't do well for other companies. In cars, for instance, the utility vehicles did very well, the passenger cars not so much. And so companies which were catering to utility vehicles, some companies there reflected strength while others did not. So that is an important question, and I think that that's playing out sector after sector.
Anshul, also if you can talk about the real estate sector. I mean, we've seen some kind of correction happening in the short term there, but while the sector may have been doing well this year, what's your outlook on some of the companies in the real estate sector?
I was someone sent me a video yesterday on the scale of the UAE real estate companies and how that compares to Indian companies. Now, bear in mind, UAE is a small geography and the scale is multifolds of the Indian real estate companies. Some of that is because the per capita income in that space, in that region, is far higher than the per capita income here. Also, the kind of people that they attract to come and stay over there are also wealthy. And as a result, real estate companies have done exceptionally well there, both in terms of their numbers, and some are listed. So those companies, the listed companies, have also done well. In the Indian context, our per capita income is somewhere close to $2,700. And it is a given that we are moving towards $4,000 in the next 5 to 7 years. Now, whenever that happens, that trend plays out and the economy sees tailwinds, the one sector which benefits disproportionately is real estate. And also, in the last few years, we've seen tremendous consolidation, and the well-managed branded real estate companies have sustained business while some fringe players have actually fallen by the wayside. As a result, our belief is this sector in the long term has tremendous opportunity in some of the quality, credible players. Near term, of course, a quarter here and there, we could see upsides and downsides, mainly because of valuations. But if you take the long term, this is a sector which holds tremendous promise.
So real estate looking good and Anshul is sounding bullish over there. But now let's talk about another segment that has been doing well off late, and that's the entire travel and tourism theme. Given that we're into the wedding festive season right